Happy Friday, Pat.
Hey, Rick, how you doing, buddy?
Today we are going to be on YouTube Live, Facebook Live, and LinkedIn Live. And I tried to sign up on Twitch and go live on Twitch, but I know nothing about Twitch. So we're not going to worry about that.
What about MySpace? Or am I dating myself?
Yeah, MySpace. Yeah. I'm using, what was the name of that first browser that came out that everybody used that was really rallying in the stock market? Netspace or Netscape?
Yeah, Netspace. Yeah, I think Netspace. Yeah,
Yeah, long time ago. Well, we try to make sense of the Arizona real estate market here every Friday, and which is hard because right now it doesn't make any sense. It's nuts. We are down to on a Friday today 5,500 listings. That's we haven't been there on a Friday in a long time. We on the 7-day moving average here, we had 3,700 homes come on, 3,697 come up for sale, new listings, and 3,787 go under contract. That's a difference of 90. So it's kind of closing in. You can see that the contracts are starting to exceed the number of listings exactly like it did last year at the same time. There's only a difference of 200 homes. It's amazing how the pattern just kind of remains the same month after month.
Now the blue line is listings, correct?
Yeah, blue line is listings. Yellow lines are homes that have come under contract. And then dip into the Cromford market index today. And there's a couple of things I wanted to point out. He's saying that in Scottsdale, there's only 317 single family homes without a contract for sale in Scottsdale. And the long-term average is over 2,000. Last year, we had 533. And the pinch is even tighter in Paradise Valley. They're experiencing an extreme shortage. There's only 85 single family homes. If for people don't know where Paradise Valley is, here's the whole valley right here. You can barely see Mesa, Gilbert, Tempe, Phoenix. And Paradise Valley is north of Scottsdale, north and west of Scottsdale. And it's highly affluent area. Some of the homes are right up next to the mountains here. You can see these homes, $8-10 million homes, and there's only 93 for sale. The interesting thing is that when I pull up the Cromford Market Index, and we'll do it in a minute, and we'll take a look here at the City of Maricopa, which is south of Chandler. You go down here, way down south there. It's about 45 minutes south of downtown. They're above 2020 inventory levels, while everybody else is below. Something's going on in Maricopa, and they are at their Cromford Market Index. They're at the bottom. They're at 233. So anything over 110, it means that prices will go up on the Cromford Market Index. Look at Fountain Hills, 703. Buckeye and Maricopa went down last week. They went down. Now every one of them is tilting in favor of sellers. And what they say here is that any CMI Cromford Market Index over 110 is a signal for prices to increase. So with CMI readings between 233 and 704, prices are set to rise significantly over the next 6 months. That's pretty wild.
It is.
That's about as far out as the Cromford Market Report goes, is 6 months. They don't stick their neck out much farther than that. But and then there was one more thing I wanted to show you here and see if how accurate you think these guys from Realtor magazine. Consumers' belief on the typical down payment. 16 to 20% think you need a 35% down payment to purchase a home.
Wow.
And I think it's also pretty common right now that people think you need 20%.
Yeah, I think there's more people out there that think you need 20%. I think the older generations, I mean, I think probably demographically, I think in the older, I'm not going to, discriminate what older is, but I think
my age.
Yeah, your age. I mean, I think a lot of them were used to putting 20%. I think the people who are used to putting 20% down still think you have to put 20% down. And, if they're not involved in the markets at all, they're not going to know,
Yeah,
Um,
absolutely. Yeah.
I mean, I think the younger age gaps, 25 to 35, 35 to 40, realize, they see their friends putting 5% down, 10% down. So they know that. So I think that
Yeah.
might be, something there.
Well, so what's your overview on rates this week? We kind of just went one level and just kind of stayed there, didn't we?
Uh, I will show you uh, my screen here. Oh, God, I gotta get.
All the world waits.
Yeah, I know. Tell me
There we
about it.
go.
Okay. I mean, this is basically a 3-year. This is this is a 3-year, and right here is a low in 2020, and then so where our rates, they are right here. Obviously, I'm gonna break it down a little bit further. Um, I mean, they had a little scuttlebutt. Obviously, this is December 21st, and then from December 21st to January 18th. So for about the last month, we've had this series of just run ups. The last 3 days, we've seen a little reprieve. It hit. There's been it capped out at 188. It's been tipping right around 188 on the 10-year Treasury. And then we saw a hit today where it's basically down from 188 down to 1.77. So, after you see this run up, you're going to see a little resting period. I mean, there's another resting point at about 170. So we got about another 7 basis points to go down from there. I mean, the bonds seem like they're resting, but obviously the overall trend is up.
Yeah. Well,
Unfortunately.
there isn't a lot of news this week that would move it either, right? So,
Yeah, I mean, not really. I think I personally think. I mean, the overall trend. I mean, I'm just gonna try to keep it simple. I try to complicate stuff and get wordy, but I think the bottom line is the trend is not your friend right now. I think people that are looking at locking. Um, you're gonna see periods where we see a couple of days. Like I said, the bond's been kind of coming back down a little bit. The rates have been coming down. I think one of the things we gotta keep in mind is the geopolitical ramifications now too with Russia. I think if we see something happen there, we're going to see a little pull back. Rates are going to come down a little further. People start buying bonds for safety. So as people buy, rates go down. So that might be our little short-term reprieve. I think in the next 30, who knows what's going to pull there. And then obviously if something happens with, after the Beijing Olympics, they're saying something might happen with Taiwan and China.
yeah, there's a lot of possible black swan events, but I think we'll see some volatility the first quarter. I think you're just going to see that rate just bounce around. But to your point, the trend is your friend until the end.
I know it's not your friend right now, but it's
don't expect it to come down. Fannie and Freddie came out, or was it? Let's see, who are they saying this is? Fannie Mae forecasts a return to normal.
Yeah, I don't know what the hell that means.
Yeah, I don't even know what normal is anymore. This just shows how much we went up here in growth, percentage of growth, and then they're forecasting a quick turnaround. Now, we just looked at Arizona numbers, and we're not doing this yet.
No.
With the inventory that we have, don't expect us to turn. Tyler saying, any guess where rates will be by December? Yes, we'll have to guess.
Yeah, it will be a guess. I mean, I think, we saw rates go from the high threes to, we might see a point spread. I mean, we might, obviously because anybody, like I said, I can guess just as good as the top analysts out there that are getting paid millions and millions of dollars because, you and you always, I've seen it the last 34 years. These guys are horse crap when it comes to really knowing what they're talking about. They never are exactly right. You just got to take kind of a range and say, okay, it's going to probably be in this range. These people that do these forecasts, they do it, like you said, for headlines and the capture.
Well, Realtor.com was the only one that was relatively close when it came to this year by saying at the end of the year, we would be at 3.4 and we were 3.47. So out of the big three, which is Zillow, Realtor.com, and CoreLogic, they were the only ones that got that right. All of their other forecasts, as far as how high housing prices would go, none of them were close.
Mm-hmm.
And so I'm not going to try. We can just
No.
kind of project. But
Well,
here's an interesting one. 2021 U-Haul Growth Index shows accelerated in pre-COVID migration trends.
mm-hmm.
So if you're dark green, then they're moving here.
Mm-hmm.
Um, and if you're Illinois, California, and that is Pennsylvania, New York, um,
They're
they're,
moving.
they're getting out. So
Yep.
it's hard to even get a U-Haul to go one way. There's companies. I mean, some of these U-Haul guys are paying people to go to another state and bring the trucks back.
Oh, I
So
imagine. Yeah. I
might
mean,
not
because
be a
yeah,
bad gig if you're looking for something to do. I mean, just
no kidding. I had a,
get a hold of some U-Haul places in California and say, hey,
I'll drive.
um, I'm going to Los Angeles next week. You need me to bring a truck,
Yeah. Yeah.
and then rent a
Exactly.
car when you get there.
Yeah.
So
Exactly.
or fly back. Another
Well,
trend that I saw come across this morning on my LinkedIn, and I think it's disappeared because more things have scrolled in, is the trend for Zoom calls is people are getting burned out on Zoom calls.
hmm.
Some people are having as many as 11 meetings a week because it's so easy to host a Zoom call meeting now instead of getting people in one place. Last year, meetings went up
Yeah.
and people are like, stop it.
Yeah.
Just,
Yeah.
so, I mean, it's great to work from home, but they're just on Zoom calls all the time.
Yeah.
And
No, it's just, it gets, I hope people don't get burned out about StreamYard calls, videos.
no, StreamYard calls are great.
No, man, go back to rates though. I think typically what I've seen, I mean, I think we've seen, the 2.5, 2 3/4. Obviously the twos are, Barry Habib was saying that in 2 years, we're going to see him maybe back down again. I just, I think that was an opportunity that people have lost. I think now, they're at, now they're rates are 3.5 to 3.3 and 3.625, 3 and 5 ace to like 3 and 7 ace with me. And I know retail banks, I guarantee you, they're probably quoting 4.25, 4 1/8, 4.25, 4 and 3 ace. I'd be a betting man. I mean, and I think we saw that trend where it was, high twos for a while. Now they busted up to, the low threes, kind of sitting in that range. And every time it busts through a new range, people have to get mentally, past the fact that like, hey, I'm gonna, if the rates go to 3.5, well, I'm gonna wait to see they go back down to 3. Then they just aren't. I mean, I just there's nothing in the economic.
It would take
You know,
some real bad economic data for us to start knocking on three's door again.
yeah,
I
yeah,
think.
yeah. And so
I mean, you're the mortgage guy, but that's what I think. So
yeah, I mean, and people now they're in the mid threes, mid to high threes, and where are they going to be in December? I mean, anybody's guess. Like you said, I mean, I could be paid $5 million or paid $1 a day, and have the same type of capability to guess. But I mean, the data that everything that you try to see trends, and I think, there's a good chance we'll see them in the low fours. I think
well, we
mid
talked about,
fours.
not to change the subject too quick, but we talked about condos last week and some of the pitfalls we see. Here's a question. Thoughts on how the market will be affected due to the large amount of homes being purchased by investors? With that appears to be a downward rental yield and increasing interest rates. Until you start seeing higher vacancy rates, I think that investor activity is going to stay here in Arizona. It is shifting to some other states, maybe Tennessee, but they're still coming here like crazy because the rental yields are there,
Yeah.
and it's a shame because it's eating up homes that people out there could be buying, and that's
Well,
when
I think, that we talked about the second home, the second home price. I priced out, uh, there's some lenders, like you said, I think last week I said there's some lenders that are already pricing in the second home pricing, um, for that 4.125 hit. So you got to put 40% down now to not really get a substantial hit on a second home.
yeah, but
So,
most of these guys are all cash, so that won't even bother them.
yeah, true. Yeah, that's a good point. That's a good
You know,
point.
they're all cash. They come in, boom.
I mean, yeah.
It's
But I mean, I'm talking about, that's why they raised the second home thing, is to try to dissuade some people from buying a second home. Yeah, that's, it's not going to have an effect on that. But the rate, I did, run the rates, it's around 5%. It's going to raise, I think I was at a 350,000 range, 375, $400,000 range house. It's going to raise the payment by about $400 a
So it's
month.
not money you got to come up with up front. It's just rolled into the loan.
Yeah, the cost can you can either pay for the loan, in a higher rate, or if you want, hey, I want 3 3/4, well, you're going to pay like $12,000 for that rate.
Jeez.
Yeah. So,
Well,
let's see.
speaking of investor owned, the iBuyers really backed off in December. Home purchase in December, open door. Let's see, this was December compared to November, but they were still going crazy compared to last year. Open door did 323. Last year they did 120. OfferPad bought 123, and last year bought 92. The interesting thing is here is the inventory, homes in inventory. We have 3,335. And think of that. We just shared a number that said that we have 5,500 homes that are on the market, right? And 3,000 of those are these guys that are listing the homes. Now, Zillow still has homes for sale. They're still trying to get out of it. They got 785 still on the books here in Arizona. So they sold, let's see. Look at these prices, though. Open door, they got a little aggressive this year. Their median purchase price was $409,600, and their median
We just lost you for a
sales
couple
price.
seconds there.
What's that?
Yeah, we lost you for about 10 seconds there, about
Oh,
10 seconds ago.
okay. Well, their median home price for open door bought was $409,600. Sales price $435. But look at Zillow. Their average price that they purchased was $449, and they sold it for $430. There's a money-making deal. OfferPad is a lot more conservative. They're paying $387.7 and selling them for $435. So they were getting them at a lower price than Open Door and selling them for the same price as Open Door. So they're much more conservative. Their analysts are a lot more careful than Open Door.
This is local, right?
This is local, yeah.
You got to realize OfferPad is a locally based company too.
Yeah,
they're based here. They're based here. So maybe they get more intelligence on the ground.
Well, Open Door started here too.
Oh, okay. Okay.
Yeah, we were the first state.
Okay.
So they were in I think they were in Tempe. So now we talked about condos last week and some of the pitfalls. And one of our YouTube viewers, Marcella, sent me an email and said, "Have you ever heard of cash only condos?" And I really hadn't, but she pointed this one out. And get this, it says in the private remarks, cash only per HOA resales are cash only due to more than 51% owned by one entity. And of course, that's ripe with spelling errors. So I'm going to get rid of that there. But so more than half of the units in this complex are owned by one group. And so they can't get financing now, right?
Yep. Yeah, it's a non-warrantable condo. Basically, warrantable means is it can be warranted by Fannie Mae, Freddie Mac, basically, signed off on. And if it's
so
51%,
the HOA was asleep at the switch. Those guys never put in requirements that they not exceed a certain level of rentals. They just ignored it. And now look, the value of those units are going to go way down. This one's $189,000. It's a 2-bedroom in Phoenix, nice part of town, real close to Arcadia, and it's only $189,000. It could easily go $260,000 if you could get financing, if it was warrantable.
Yeah, when you have a non-warrantable, it definitely decreases your chances of getting financing. Like I said, they're basically just saying, we want cash investors because we're not going to mess around trying to go the non-warrant. You can get non-warrantable financing. Basically, it's kind of like non-QM, non-qualified mortgages. It's definitely, it's like a subprime loan is basically what it is. But even then,
they're now they're in a position right now where the owners could vote and sell that entire complex to an investor to convert into apartments.
Yeah. Yeah.
If you've got 51% ownership by one guy already, you only need just a handful of other tenants to go ahead and say, yeah, I'll sell. And
they don't have the filibuster.
Yeah. Yeah. So that's a danger. That, watch out when you're buying condos, pay attention to how many of them are investor owned and how many of them are used as rentals.
Well, that goes back to our conversation we had a couple weeks ago. We talked about condos, as far as, when a realtor or client calls me and says, I'm looking at buying a condo, the back, the hair on the back of my neck just stands up because there's so many different little stipulations that the HOA questionnaire and, working with the HOA. And like I said, if the HOA isn't on top of it, you can send the questionnaire in and not get it filled out for another 3 or 4 weeks. And then they fill out the questionnaire 4 weeks later, and then you're toward the closing and they're like, oh, we didn't know this. We didn't know you had a $3 million lawsuit, pending
Yeah.
on the property, for asbestos or something of that nature. And that's why condos are just, once again, I mean, not to beat a dead horse, but they're just, I'm very leery of them when somebody calls me on them. You got to do you want to do your research and check it out before you really dig in and buy a condo.
Yeah. And I think you need to be really aware of it before you even pay for that inspection and pay for the appraisal.
Yeah. Oh yeah.
I mean, have the agent
Yeah.
call, and get information on the HOA. Now I had a great agent on a house or a condo that we were trying to get for one of our subscribers here, and the selling agent, and I mean, I've had a good year. I have worked with so many great selling agents that, I mean, I have nothing to complain about any of them. They were all fabulous. This guy calls me, we're already under contract, and he goes, hey, I'm hearing that the HOA is going to hit everybody with a $5,000 special assessment in December. Merry Christmas. And he goes, I'm going to see what I can find out. And to me, this has got to be paid by the gal that owns the place that's selling it. And she had all kinds of rental stuff. She was from California. And, he could have just ignored that, and we would have found out at the last minute. And there was no agreement in the HOA addendum. So there wasn't anything in the HOA addendum that even said there was a special assessment coming. So we would have ended up just killing the deal, and we walked away from it anyway. And there was, so you end up, there you go, you're out your appraisal and you're out your, inspection fee. So you're almost out $1,000. So you really need to know if there's going to be any hiccups with these HOAs before you write the checks.
That's a perfect example of why, like you said, there's the stuff that crops up on condos. It's just, like you said, I've seen it more than once where it's like, oh, you got to be kidding me. I see it on Facebook posts, mortgage related Facebook posts, like pretty much all the time, which is it's kind of, so.
Yeah. As if there wasn't enough other stuff to worry about. So
yeah, exactly. Exactly.
We had one just a few weeks ago that in the morning had, in the afternoon, we're trying to, the appraisal didn't come back where we thought it would. And so we weren't reaching an agreement on price, and it was in Sun City. So that evening, the deal died. And that morning, I had put it back on the market that night. And that morning, the both parties agreed on a price, and we were back on. In the meantime, I had 3 more showings that day. And so I was fortunate because the agent on the other side, who also happened to be with EXP, was very sharp. And, in this business, they always say, deliver the bad news quickly.
Yeah.
So, so I would call her and go, hey, look, here's where we're at. And she said, I was getting my nails done when you sent me that text. And so she calls and well, let me see what I can do. And so she was sharp. She knew what she was doing. And it really helped hold the deal together. I said, I've never resurrected a deal from the dead. Do you know how we do that? She goes, I haven't either, but let me call. So we had to hurry up and call title company and say, don't kill the file, because they were going to send the earnest money back. And then she had to get a hold of the lender. Don't kill the file. I got a hold of my coordinator. Keep it alive. So, because sometimes you get in, just when it's done, you just delete everything. I'm out.
So yeah, I mean, it's everything's negotiable. I mean, speaking of bad news, it's like you said, get it out immediately. And my feeling always is bad news doesn't, it's not like fine wine where it gets better over time.
Yeah.
It's just, you rip the Band-Aid off and say something happened here. I mean, nothing's, real estate transactions are really kind of a living they're a living species. They're changing constantly. That's why the sooner you can get off the table and close, the better.
Well, looking ahead, let's see, we have a question here. It says, question running. Good idea to take a look at the exterior siding, roof, windows, balconies, amenities. Yes. And roads. If there's any issues, ask the HOA if they have any special assessments. The parking lot tells the story.
Yeah.
Used to have a guy I worked with. He goes, first thing I look at is oil stains.
Oh,
But
interesting.
Looking ahead to this week, I wanted to point out something. Last year, as we get into January, see the gap here where listings start to fall, and they fall because the sales activity starts to increase. And so the next 2 weeks looks like it's going to be even tighter, and we're trending in the exact same pattern. So I'm not expecting any inventory relief coming up in the next 2 weeks. We are seeing it get back up to where it was, and we've exceeded where we were as far as the 7-day average here says we're at 38.15 7-day. And then last year we were at 38.13. Wow. 2 homes. So it's just going to be, more of the same for January, and I fear February. Now, COVID is starting to peak. So if that's been an impact, then let's just hold our breath and hope that goes away and things get back to normal real quick. So,
yeah, biggest thing I'm hearing and seeing out there too. I'm kind of stuff on the street. People are not selling because I've heard this a couple of times now. So, people are afraid they can't find anything to buy.
That's why the iBuyers are so popular right now, because people can, sell to them and then choose their closing date several months out while they're waiting for a house to be built. That's why their share went from 6% to 33. So, it takes out the uncertainty. And so it gives them a little more flexibility. Yeah. I mean, I wouldn't want to sell and then try to find something else. It's just a little bit of a broken record. So anyway, Pat, you have a fabulous weekend, and the millions and millions of viewers that we have a good weekend as well.
All right. Take care, buddy.
Y'all.
Ciao.